Good morning. Jeffrey Friedman, Senior Commodity Broker with RJO Futures. Morning comments on stock index futures, October 2nd. Well, we don't have a lot on the docket today, and I always give you the word of the day. The word of the day is still going to be either Europe or Spain or discussion, but it's in that area on the planet. The yields on the Spanish bonds and the cash market came down. The stock market likes that. Yesterday, as a quick review, we had ISM. That was positive, beat the street on expectation, and again, we rally. So when we get bad news like construction spending was a disappointment, we rally anyway. Good news is good, bad news is good. That's the theme we're going through with the stock index futures. Now, we're not at the all-time high for the year. We have pulled back and had some consolidation, but we're still in an uptrend, and we'll talk about the technicals in a minute. One important note, we have the FOMC minutes coming up tomorrow, and we have non-farm payroll, which is, in my opinion, the granddaddy of economic news in America, because it represents our employment situation, which is very in need of improvement. We'll talk about that later in the week. Let's get to the technicals right now. We'll look at the December future contract as our pivot point gauge because it has the most volume, as I always said. First of all, we are in an uptrend, okay, and we are doing very well for the year with the help of all central banks. But have said that, we are right around 1443. We're up about 6 for the day. Volume hasn't been robust, but nevertheless, we are positive, and that's probably because of Europe. Like I said, we do have some important meetings coming out and discussions for the weekend and Monday and Tuesday, but have said all that, we need to stay above 1450, 1451 in the December S&P future contract. That would be a little damaging, and of course, if we ever go back down to 1415 and close underneath that number, in my opinion, that would be extremely damaging. That would change the trend of the market or the charts, and the bears would take complete control. Right now, the bulls are in control. They've pulled back, a little profit taking. A close over 1465 would power us to 1495. And if we close over 1495, you know, we could possibly go to 1550. I don't think that that's in the cards very short term like today or this week, but I thought I'd at least bring it up to your attention. A close under 1450, the extreme on the other way, would power us down to 1393 and possibly 1376. Again, not on the docket for this week, in my opinion, but surely you should be aware of it. Obviously, the conservative approach is going with the trend, buying dips at support levels, trying to stay with the momentum, higher highs, higher lows, higher closes. Counter trends would be a more aggressive approach depending on your timetable and your risk capital. Remember always, trading futures or option to futures involves risk of loss, not suitable for everybody. A lot to think about. You should be calling me, Jeff Friedman, and I could try to sort it out for beginners. I can assist with intermediate, and I can lend a helping hand to the pros that are trading. Good luck, good trading.